Let's make sense of all of it. And who better than Ravi Dharamshi, CIO at ValueQuest, joining in the show right now to talk about exactly that. Ravi, hi, good morning. Thanks for your time. Ravi, how do you make sense of the budget yesterday and, of course, the STT hike on F&O from an investment perspective?
Good morning to all of you. No, I think, first of all, we shouldn't be judging the budget only through the prism of capital market. Of course, we are capital market participants, so we are definitely much more impacted. But budgets are about economic direction and policy intent, while markets are about marginal flows. And I think the major disappointment came from the fact that we did not do anything to attract those marginal flows. We've been essentially facing FII selling since last year or so, and there was nothing in the budget to stem that flow. I think that is where the disappointment in the market came from. I won't rule it as a referendum on the budget, whether that budget was bad. In fact, I wouldn't even go to the extent of pinning it on STT increase, because I think it's too small a thing in the entire scheme of things to make such a big dent. It's just a lack of intent from the government to attract foreign flows is what disappointed the market more than what is there in the budget or isn't there in the budget.
Absolutely, Ravi, and I think after that, sentimentally, the markets are so fragile because of the global news flow, the outflows, etc. But that's exactly the point. What lifts the market sentiment, Ravi, from here, considering the budget failed to do so?
Yeah, so I think let's first take budget. The budget is credible. The numbers are credible, whether it is the debt to GDP, whether it is the fiscal deficit, whether it's the capex increase, expenditure increase. Everything seems to be credible, and there is not much room government had in terms of increasing the expenses, and they have not done so. So from that perspective, at least there has not been too much largesse given, and the budget math remains credible. But for market to revive, I think we will have to become relatively attractive to the world. I think what we have been suffering from is the fact that our valuations were relatively very, very high. And then we saw a slowdown in earnings last year. Earnings are going to revive cyclically this year. However, we need to see the growth to be more than 10-12%. And only then will relatively we become more attractive than the other emerging markets. Other emerging markets are very attractively valued. I think we are reaching a point where I think our premium is completely washed out. And we are now at a relatively neutral, if not attractive level as compared to the emerging markets. And I think a lot of steps government tends to take outside of the budget as well. So I won't rule out other sector-specific moves which can revive the market. The biggest, of course, the event remains the US trade deal. European trade deal coming through, and budget, I think, did not do enough to revive the market. But I think US trade deal definitely remains a big deal. If and when that will happen, I think that should turn the flows back to positive in India.
Do you think yesterday's reaction to PSU banks and defense stocks was a little overdone, given the fact, PSU stocks were down? There is a new high-level committee looking at how to do restructuring of PSU banks going forward, and also restructuring of the two mega NBFCs, PFC and REC. And in defense, we have nearly 18% capex, which has come on, which has been allocated by the government. These two sectors did fairly badly yesterday with respect to how they ended.
So market reaction depends on the positioning. In fact, defense actually delivered. The budget actually delivered on the defense. But I think the expectations were running high. There were some expectations which said more than 20% or even as high as 25% increase in the defense budget. And I think because the expectations were so high that 18% does not look like a big number. But having said that, I don't think there is any change in the story in defense. It remains a multi-decade theme worldwide, and I won't be so worried about the reaction of the market on a one-day basis. However, the valuations definitely do remain a challenge because a lot of the growth had been factored in. Similarly, in the PSU banks. In fact, if you see, these two sectors were one of the few sectors which were doing well, even in the face of markets not doing well. So I guess it's just the disappointment on the expectations which has led to these sectors turning dramatically down yesterday. But otherwise, the fundamentals of the sector still remain strong.
Ravi, I'm not sure if I missed something from a decadal theme perspective. You have the knack of tracking that as well as identifying those. Anything that stood out for you from a theme perspective in the budget?
So I think, the budget speech did not have any mention of renewables or battery storage or anything. But if you go inside the details of the budget, you will see that there is absolutely fantastic focus on these areas. And I think government is actually doing a very good job of moving from one stage to another. So if the last 4-5 years were about building out the solar capacity, the next few years are going to be about building the storage capacity. And I think very smartly government has reduced duties or continued some of the exemptions, which is going to lead to lower capex as well as lower opex for companies that are focusing on battery storage systems, data center, the bill of material for even for manufacturing some of the renewable equipment is going to come down. And I think in today's scenario where it is essentially a multipolar, fragmented global economy, what tends to happen is you have to have control over your own supply chain. It is not about you're going to get it cheaper from somewhere else and you should not hence manufacture that in India. But we have seen today the supply chains are getting weaponized, and we want to avoid that scenario, especially in some core and critical sectors like energy. So that is where I think the entire focus on nudging the scale and then nudging upward and backward integration is what this budget has actually laid out. And I think that is a brilliant move in terms of, and I think a lot of the commentary has missed that. I would give a lot of credit, credit to the government in continuing with the focus on renewable energy.
Ravi, other than renewable energy, you've been a long-term pharma and healthcare bull. Tell me, what is it that you made of the announcements yesterday? There was the Biopharma Shakti, which is a solid 10,000 crore rupee initiative over next 5 years. There's patient relief, custom duty changes, healthcare infra, workforce, lot of announcements on healthcare. And does that change anything from an investment perspective for you now, specifically?
So again, see, pharma industry in India has to undergo a dramatic transition. They have been, champions in the generic area. But I think if you want to win the race in the next 10, 20 years, you will be competing with the innovation that China is doing and US is doing. And we have to move up the ladder over there. The steps taken in the budget, for example, I think, reducing the number of approvals required for setting up clinical trial sites, the amount of budget allocation given to, I think, BioShakti, all those are steps in the right direction. And I think what we are lacking is the risk appetite from the private sector to really pick up. I think we need to go towards doing far more in terms of R&D, come up with our own drugs. And that, I think, is the challenge. I don't think budget is going to change that dramatically, but there are incremental steps towards that. Nothing changes from our investment perspective because finally, pharma is not a sector that is going to be driven too much by what government policies do. They have to adapt to the world markets and world scenario. And I think Indian pharma companies do have it in them. They just need to increase their risk appetite, and there might be some failures along the way, but you'll have to take those calculated risks.
The only sector that stood out yesterday was IT. Is buyback clarification or change in accounting for taxation the only reason why IT is up, or you see a impetus to GCCs coming into play, more of a nudge for foreign IT companies to come and set up in India?
No, so the GCC coming in and for nudge for foreign companies to come, they do not benefit Indian IT companies in any which way. So the only positive from the budget yesterday definitely was the fact that the buyback route has opened up again. In fact, it is in some way contrary to the I mean, I do believe that Indian IT companies are not doing a good job of allocating their capital. If they have to go back to doing buybacks, that means they are not investing enough. And there's a lot of innovation happening in the technology space as well. We might not develop large language models, but at least we need to focus on developing the small language models. Get into the AI race, and we cannot be only the picks and shovels providers. We need to build platforms. We need to build applications on top of that. And I do believe that Indian IT companies have the required skill set, but I think they lack the will and the courage to put that money to use. In fact, if what we saw from TCS announcing a big data center capex, it was a huge move away from remaining asset light to becoming asset heavy. Similarly, if you see the hyperscalers in US, these magnificent seven companies, they were all asset light business models, but now they are going heavily into doing capex in the data centers. So they are also joining the AI race. So I think Indian IT companies right now, as we stand today, I do not offer the prospects of growth beyond single digits, and that is not exciting enough. Buybacks will do a little bit of good in the short run because the capital is going back to the minority shareholders if they are not able to find good use for it. But I think from a nation point of view, we need these companies to step up and join the race of deep technology and AI.
Ravi, I wonder if, and you track this space quite closely on aero as well as on defense. I know defense we spoke a bit, but maybe aero. Is there enough being done with regard to that opportunity? Because again, it's a huge opportunity in terms of size, and it's a decadal theme.
So let me just briefly explain what this opportunity is. We are talking about almost a $750 billion to $1 trillion kind of outsourced manufacturing of aerospace components. And in that, India has barely less than $2 billion of contribution to that. There is a scope for this number to become 10, maybe $20 billion in the coming next decade. And we need to do everything to incentivize that. Of course, the biggest hurdle right now is the trade deal, lack of trade deal that we have with the US. So no amount of incentivization is going to bring the customer to India unless we are, at least the top 20, from the 50%, the 25% penalty goes away. Only then we become competitive. But having said that, I think there is some incentives being given to aero engine manufacturing, some incentive given to even to the manufacturing of the tools. And that is a step in the right direction. But I think the bigger push will come through when the US trade deal goes through and that we become part of the global supply chain. India has a natural right to win over here because we have a large engineering talent. We have an auto industry which is into manufacturing. Of course, this requires far more skilled labor. But I think the base is there and we just need to get some training and have companies that will become part of the global supply chain and go through the certifications and all that. That will create the industry. And I do believe the building blocks are there. We just need to get the trade deal and have some more incentivization in place.
So Ravi, as you look ahead now, of course, budget is an event which will get digested today, tomorrow. But as an investor, are you feeling positive about what the year holds and whether there's going to be a meaningful earnings recovery or not?
So let's go back to why we saw this kind of market, where almost maybe at index, we might be down only 7, 8, 10%. But at broader level, we are down almost 30 to 40%. And the reason was essentially, I would say, policy missteps on the part of RBI as well as government, where they failed to anticipate that, where the election was there in 24, there was a 5-month period where government could not spend money. And RBI actually completely strangled the liquidity in the banking system. And that is what led to the slowdown. Now, the slowdown takes time to revive. Even though all the policy measures have been taken to revive that, it's taking some more time. And the other problem from the market's point of view was the high valuation. Over there, I would say we have traversed almost 80% of the journey, if not 90%. And valuations have started to become attractive again. So both government and RBI policy stance have changed, and valuations have started to become attractive. So from that perspective, a cyclical recovery in earnings and cyclical recovery in the market is on the cards in the later half of this year. From a very, very short-term perspective, I think globally also other emerging markets have rallied, and that has made their attractiveness a little lesser. So I do believe that second half of this year holds a different story than what we have seen whole of last year and this month as well.
Ravi, do you see a risk to the margin trade book at this level, given the fact that you have seen a lot of margin funding happening to silver Bs and gold Bs, and that's on the back of a lot of collateral coming from the main flagship shares which have been put as collateral for this margin trade?
No, for sure. I think one leg of selling can happen because of these over-leveraged, momentum-chasing positions. I think a lot of people climbed the gold and silver train pretty late in the day, and that is going to lead to a severe shake-off. And in fact, we have already seen the shake-off, and everybody is quite deep down in the water. So this will have one round of liquidation, but that is from a longer term investor's point of view, that is actually an opportunity. We should be taking advantage of the fact that leverage traders are being forced to sell, and there is no consideration for the fundamentals or the valuations. So I do expect some amount of rub-off effect of that, but I don't think it will be market defining. I think it for a long-term investor, it's actually an opportunity.
Okay, Ravi, so much to talk about, but we'll have to thank you on this note. Thanks as always for your time.
Thank you so much.
Thanks.